Today on Fear and Greed, Federal Treasurer Jim Chalmers says changes to the Reserve Bank could start happening today, adding an election early next year is unlikely. Melbourne, for one of the few times this year, is the strongest auction market over the last week, and cash isn't going anywhere. Plus, Rio goes big into lithium and a mega fine for consulting group McKinsey for helping market opioids. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 16th of December 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, Federal Treasurer Jim Chalmers says that new appointees to the Reserve Bank Interest Rate Setting Committee could happen as soon as today, as he highlighted the government's economic credentials following last week's drop in the unemployment rate to 3.9%. Surprise drop, Sean.
Surprise drop. Jim Chalmers was certainly crowing about it yesterday. It was an extraordinary result, really, but he wouldn't be drawn about when the Reserve Bank will cut interest rates. Of course, a lower unemployment rate does nothing to convince the Reserve Bank to cut rates. In fact, it probably does the opposite. On the new interest rate setting committee, he said he had had collaborative discussions with his opposition counterpart, Angus Taylor. Yesterday, Mr. Taylor wasn't quite so complimentary about Dr. Chalmers. This, of course, is a result of the last sitting day of Parliament pushing through legislation that establishes this new interest rate setting board for the Reserve Bank. There's a second board called the Governance Board that all kicks off next year. Dr. Chalmers also hosed down speculation of an election early next year, saying that the government is working on a 25th of March budget. Now, if the government's in caretaker mode, i.e. if it's called an election, it's not going to hand down a budget. Dr. Chalmers rejected suggestions that the timing of the next election could depend on the potential for an interest rate cut in the first half of next year. Yeah. Every politician worth their salt is interested when interest rates are going to fall.
Oh, absolutely. The other big thing that was being discussed yesterday, Dr. Chalmers wasn't so positive about opposition leader Peter Dutton's nuclear plans.
Less positive than he was about the unemployment rate, that is true. A brief recap, the coalition claims its nuclear power plan will cost $331 billion over the next couple of decades. That's about $263 billion less than Labor's renewable plans over the next 25 years. Of course, these are the opposition's costings. Opposition leader Peter Dutton released the costings on Friday. It's based on the goal of net zero emissions electricity by 2050. Under the coalition's model, renewable energy will still be the dominant source of power by 2050, responsible for 54% of generation in the national electricity market, but nuclear power would provide about 38%. Under the government's policy, about 94% of generation by 2050 would be renewable energy, the rest coming from gas and storage. It's the costings, though, which is really driving the debate at the moment, with Jim Chalmers saying the only way for the opposition to achieve its costings would be to shrink the economy substantially. He said the plan assumes a $4 trillion hit to economic output over the next 25 years. Basically, he said it's ludicrous to think that the economy will need less power in the future.
Sean, do you think anyone's listening in terms of politics at this so late in the year, with Christmas just around the corner? Do you think most people on the street are just fed up with politics and this kind of argy-bargy over policy and costings into the future? It's just, come on, guys, give it a rest. Let's pick it up again in the new year.
Yeah, maybe. It's such an important debate. I think it's really good that the opposition has a different energy plan to the government, because you can actually choose between the two. And I think the debate is whether you want nuclear or not. It's not about how much it's going to cost. I think that's the first debate, and then we should worry about the costings. But as you say, Michael, probably most of us are tired by this time. Our last week here at Fear and Greed, at least our last week of full shows. So, yeah, I'm getting a bit tired of it. No doubt.
We've got something quite special coming up over Christmas and a couple of weeks. It's just something a little bit different, something a little bit fun, but something that is really must-listen podcasting.
For summer, must listen.
God, I'm not overselling it here, am I, Sean?
No, not at
impossible.
Not at all.
All right, let's talk property. Things are winding back.
So you're not going to tell us what it is?
No, I'm teasing.
But
I'll give you a clue. There is a lot of really exciting stuff if you are interested in investing, if you are interested in property, if you are interested in markets and companies and getting some ideas and some tips on everything that you might need to be looking for in 2025, then do not miss a moment of fear and greed over the next few weeks.
And the best way to not miss it is follow us.
Yeah.
Whatever your podcast provider is, hit follow. You're going to get every show.
Yeah, well said.
Sometimes there's 2 shows a day.
Oh, yeah.
Anyway, back to the news.
You sound so excited about this, Sean. It is going to be great. So make sure you do hit follow. Let's talk property. Things are winding back for the summer break in the auction market, though. Sean, there were still more than 2,000 homes up for sale last week. And I think the kind of standout feature for me was that it was a reversal for most of the year because Melbourne is now looking stronger than Sydney.
Yes, in fact, based on just this week's auction preliminary clearance rate, Melbourne was better than any other city in the country. From memory, I don't think that has happened. So, for Melbourne people, leaving the best to last. Adelaide's a town that seems to always have a high clearance rate, sort of high 70s, 63% last week. Below Melbourne, 69%. Well done, Melbourne. That's what I reckon. Sydney was also 63%. As we said last week, the market is ending the year with a whimper. But still, prices have risen 5.5% over 2024 nationally, according to CoreLogic. It really does show that the housing market is based on more than just interest rates and what's happening there. We've got higher interest rates, but we have 5.5% growth in house prices. Now, in the last 12 months, mostly that's been about a lack of supply, also population growth. You put those together, it's kept pressure on prices all year. Been a fascinating year in the auction market and the housing market.
Yeah, it certainly has been. Just tell us quickly, Sean, before we go to a break, about the interview that you have coming up after the show. You're speaking with Libby Newman from Vanguard.
We talked to Libby all about the value of a financial advisor, and everyone knows at Fear and Greed, we are big fans of financial advisors. Always take advice if you can before making investment decisions. I asked her some of the myths around advisors, whether they're worth it. They're trying to sell me something, all that sort of stuff. So it's a really interesting chat with Libby, who takes those myths, hurdles, challenges head on.
Yeah, it is a great conversation. It is coming up after the show. We still have plenty to get through. Sean, we're talking lithium. We're talking about cash, why cash is still king, or at very least a senior royal still. We've got a bumper edition for you Monday. We'll be back in a moment with the rest of the day's business news. Sean, cash isn't going anywhere, with the Reserve Bank saying it is committed to lowering merchant card payment costs and ensuring cash is a viable means of payment for shoppers and businesses.
I think debit cards are king now. Maybe this is like a prince once removed.
Yeah.
Thing is, like those princes once removed, they're always going to be hanging around, and that's the point. Last week, Reserve Bank Assistant Governor, Financial System Brad Jones says Australia's payments systems are world-class, but a concerted effort will be needed to keep it that way. He said cash remains an important means of payment for many people in the community, including more vulnerable members of society. Mr. Jones said it remains an important store of value, particularly during periods of economic uncertainty, and aids the resilience of the overall payments system. That's a really important thing about cash. If people don't have debit cards and credit cards, you still can have cash. So the actual payment system is much better when you've got all different parts of it. For these reasons, the government and the Reserve Bank remain committed to supporting access to cash. Now, the big issue with cash at the moment is actually getting it around the country. On Friday, the competition watchdog, the ACCC, issued a draft determination to grant the Australian Banking Association, major banks, major retailers and supermarkets, Aussie Post and other industry participants basically the right to collaborate to ensure the future continuity of cash in transit services. The ACCC is all about making sure there's enough competition in the market. It's always pinging people for not being competitive. Quite the opposite in this case. It says this is such a critical issue, you guys can all work together.
Now, Sean, Rio Tinto will spend nearly $4 billion to expand its Rincon. I'm assuming it's Rincon. I'm not very familiar with Argentinian mine names. It is the big lithium project for Rio in Argentina. And it's really highlighting its faith in the commodity that is so vital for batteries.
Yeah, fascinating what Rio's doing. The board's approved spending $2.5 billion US, that's about it's almost 4 billion Aussie, to expand the project. It comes after Rio closes in on Arcadium Lithium. That was a $6.7 billion acquisition that's going through the processes and hurdles at the moment. The mining giant wants to become a world-leading lithium producer, and it's investing in assets at a time when lithium prices are really low. If you're big enough, not a bad idea to do that. Rio said Argentina's economic reforms provide a favourable environment for investment, offering benefits such as lower tax rates, accelerated depreciation, and regulatory stability. If successful taking over Arcadium, it means Rio will have 3 lithium brine super sites in Argentina. It also wants to build projects in South America and Canada that it will pick up from Arcadium. So what Rio, of course, huge in iron ore, in this country at least, in copper as well, wants to push into lithium.
Just quickly, local markets, where did we finish up last week?
The local share market fell to a 4-week low on Friday morning after a week lead-in from Wall Street. It made up some ground and ended up down about 0.5% to 8,296 points. For the week, the market was down a couple of percent. The big miners led the market lower on Friday. The banks were mixed. Energy index outperformed. A couple just worth mentioning. Westpac held its annual general meeting, the last for outgoing CEO Peter King. At that meeting, Mr. King said the bank is well positioned and knows that more needs to be done to tackle climate change. Of course, one of the big shareholders in Westpac, Australian Ethical. Oh, Michael, I've forgotten the name.
Australian Ethical.
Yeah, Thank you. I didn't forget it. Australian Ethical. It had put in a protest vote at the AGM. Also, South 32 fell more than 1% despite receiving the backing of Western Australia's Environment Minister to extend the life of its Worsley Alumina project.
We need to talk about another story from markets on Friday, Sean. The biggest IPO on the ASX this year had really rather an inauspicious opening, didn't it? With
yes.
Shares down 10% on Friday, its first day of trading.
Yeah, it's a property company called Digico Infrastructure, valued at $2 billion, biggest IPO in more than 6 years, which just goes to show how small the market for IPOs is in Australia. It owns 3 data centres, once another 12 in Australia and North America. Investors thought the offer price of $5 a share was just a bit rich, hence the sell-off. It is the biggest IPO. Of course, the biggest transaction was Blackstone buying AirTrunk earlier this year for $24 billion, but it wasn't on market. It was a private deal. Anyway, the Digico Infrastructure, not a good day one.
No. Speaking of deals, though, Sean, financial services group Insignia Financial on Friday received a $2.7 billion takeover bid from private equity group Bain Capital.
That sent its share price up 8%. Used to be known as IOOF Holdings, Insignia has a bunch of financial planners, offers superannuation products, about $288 billion worth of funds under management. It's a decent company, at least in terms of size. The bid is a 30% premium to the closing price on Wednesday. That was ahead of media reports of the bid.
Sean, I mentioned before the break about AMP getting into Bitcoin. They've invested $27 million in Bitcoin, the first time that a major superannuation fund has purchased the asset class.
Really interesting. It isn't a huge portion of the group's $57 billion in funds under management, but it was done earlier in the year. It's been lucrative. The purchase occurred when the cryptocurrency was around $65,000 a unit. Today, it's trading over $100,000 a unit. AMP's Chief Investment Officer Anna Shelley is quoted in the Fin Review as saying it's part of the group's diversification strategy. Some small SMSF hold cryptocurrencies, but not the big funds. Thus far, no other major super group seems to be coming out and saying, yep, we're going to enter that market. Interesting, though, that AMP has.
Now, turning to international news and a big legal story out of the US. This is fascinating. It's been going on for some time now. Consulting giant McKinsey will pay $650 million US. That's what, about $1 billion Aussie dollars, to end a criminal investigation by the US Justice Department into the company's role in bolstering sales of addictive pain pills.
In what officials described as a landmark case, US attorneys in Massachusetts and Virginia filed charges of conspiracy to misbrand a drug and obstruction. It comes from McKinsey's work advising Purdue Pharma on how to turbocharge sales of the blockbuster opioid OxyContin, officials said. State and federal officials allege Purdue helped kickstart the nation's opioid crisis in the late 1990s, 2000s by aggressively marketing the drug to doctors while downplaying its addiction risk. It marks the first time a management consultant company has faced criminal charges related to work with the opioid industry, according to a report in the Washington Post. The agreement adds to more than $998 million that McKinsey has already agreed to pay to settle lawsuits from states, local governments, school districts, health insurers, and benefit plans. In a statement, McKinsey said, somewhat an understatement, I would say, it should never have worked with Purdue.
Yeah, maybe. Now, finally, Sean, I love this story. Bloomberg has put together its annual edition of the richest families in the world. And unfortunately, the Aylmers and the Thompsons were not on the list, Sean. But back at number one, after an 80% rally in the price of retail giant Walmart this year, is the Walton family.
62 years after the first Walmart was opened, the family's now worth $432.4 billion. Now, Sam Walton died in 1992. He divided his fortune among his children to ensure that family control was maintained and the wealth would keep growing. And Walmart has had a great year. You mentioned it's up 80%. What it's done, it owns a huge audience. Lots of people go and shop at Walmart, and it's actually been able to find new revenue streams for that audience. A reinvention of the world's biggest retailer, and its share price has gone through the roof. Hence, the Waltons are number one.
It's interesting, isn't it, that they've just never been able to kind of crack into Australia. And we've talked in the past, a couple of years ago, we spoke to an expert, basically a retail expert who had studied the Walmart story and efforts previously to kind of feel out other markets like Australia, and just, no, in the end,
couldn't do it.
Just doesn't work. But it's clearly a success in the US.
Yeah. Amazing. Number two is last year's number one, the Al Nahyan family from Abu Dhabi. The family has presided over the oil-rich emirate for 3 generations. Sheikh Mohammed bin Zayed Al Nahyan is the country's president. Number 3, the Al Thani family from Qatar, oil again. Number 4, the Hermes family, the French clan famous for luxury goods. I had no idea they were that rich. There you go. No. Rounding out the top 5 are the Koch family, 4 brothers who inherited their father's oil firm. Now they own all sorts of things, but very, very involved in politics, the Koch family in the US.
Yeah, great story. Finally, to wrap things up, Sean, much going on in international markets?
It's a big week this week in the US. The Federal Reserve is expected to cut interest rates again. Brent crude prices were higher over the weekend. Gold was a bit lower. The Aussie dollar's buying 63.4 US cents, and one Bitcoin is fetching 102,000 USD.
All right. Up next, Sean, is Fear and Greed the Week Ahead, featuring our resident economist, Stephen Koukoulas, who is very excited, obviously, about everything that happened last week.
Yeah, I mean, there's not a lot going on this week in the economy, but we have just a great chat with Stephen about where we end the year, particularly after last week's labour force figures. And in recent weeks, we've had inflation figures, we've had economic growth figures. So it's fascinating to listen to Stephen to give us his view on where we are as we get into 2025.
Yeah, it's coming up next, followed by the daily interview, Fear and Greed daily interview with Libby Newman from Vanguard. Vanguard are great supporters of Fear and Greed. So plenty of good listening in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 16th of December, 2024. Make sure you're following the podcast. That is most important. And join us online as well on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.